Hey, what's going on, guys? Retire on Dividends here. I just made a video on FEPI, a few days ago, a couple days ago actually, and it kind of reminded me that I should do the same for KLIP. So I opened my big fat mouth this morning and mentioned I should do a video, and sure enough, people mentioned they would be interested in it. So here I am using my lunch break to make a video on KLIP instead of getting my ass outside jogging. So anyway, let's get to it. So here's the website for KLIP. It's on KraneShares.com. So, just skim through it. If you don't know what KLIP is, it's basically an ETF. It's a covered call ETF, except it actually trades covered calls on a China ETF. The China ETF being KWEB. That is the underlying stock. So most people stand clear of it because they don't want any part of China. However, I look at it a little differently, and I see it as international exposure for my high yielding portfolio. I'm not familiar with the companies that KWEB is an ETF, by the way. KWEB invests into China tech companies. But I was going to say, I'm not familiar with the companies that KWEB actually has in their ETF. I know a few of the names, but to be honest, I never dove deep into analysis on them, nor do I really plan to. But you never know. So anyway, KLIP sells covered calls on KWEB, and KWEB is a China internet ETF. Okay, that's basically the summary of it. Let's see what else this wonderful website says. I hate their website, by the way. Yeah. So yeah, KWEB provides exposure to the China internet sector, which has historically been more volatile than the U.S. internet technology sector, which is good. You want volatility when you're selling calls. KLIP has the potential to provide higher yields than covered call strategy based on the U.S. and other markets. Look at them calling out the U.S., saying it'll get better premium, but obviously, their yield is good. It's not like a Coney good, but it's pretty good. Combining allocations to both KWEB and KLIP can help produce a targeted growth and income strategy. Hear that? Growth and income. Maintaining upside while trading performance, uncertainty, stable income, blah, blah, blah. KLIP provides monthly distributions. Here is their distribution rate, 47.88%, which is really, really good. What else? That's it. So I was just going to pull up their latest distributions. Well, if we go to 23, how did they pay out? How did they fare? Started the year 56 cents, then up to $1.16, $9, $3, 86, 83, 83, 83, 74, 69, 67, 62. So on the downward, closing the year. So what do we say? 62 is the last one, and then sure enough, in January, 57 cents. So yeah, their payments have gone down, but I believe that's because the price of KLIP has gone down. Because if they don't have enough money to trade options with, obviously, or should I say, they have less money to trade options with from the month prior, then of course the distribution will go down. Now, I don't know what that noise was, but the next declaration date is what do we got? It's not even on here, but it's coming up next week. The ex-dividend date. I heard a noise. I'm walking as I'm making this video. The next ex-dividend date is actually 7 days away. It's next week. So that would be Tuesday of next week, February 27th. I would expect declaration probably 1 day prior, but we'll see what it is. KLIP has been on the up and up. I'll show you in a second. And then they show featured tweets, which is kind of stupid. I mean, they got nothing else to share. But I don't know. I don't know anything about China, tech ETFs, but whatever. I'm not going to get into those anyway. So here are their holdings. This is why I wanted to make the video. I wanted to talk about their holdings. So what do they hold? They hold KWEB, they hold cash, and then they have covered calls, okay? So obviously, if you export this data, you can see how they're doing. So here it is. I hit view CSV from their website, and then I copied and pasted onto here. Simple as that, right? So as you see, they hold 4.5 million shares of KWeb. So they actually own the underlying. Now, something to note for you guys to know, KraneShares actually, they run KWeb on top of KLIP. So in essence, they're double dipping here, right? So you buy KLIP, right? You pay an expense fee, and they buy KWeb with that same money with also an expense fee. I don't know what the KWeb expense is. I should probably look at that. But, they are pretty much double dipping. I don't know. Can you get to the KWeb website from here? Overview. About us. KraneShares ETFs. Fixed income. Like how is it not easy to access KWeb? Oh, click that. Where's their expense ratio? Damn. 0.69% for a simple ETF? That's a lot. So what is the expense ratio of KLIP? 0.95%. So yeah, I don't know. I should know this, and I probably covered this before, but I don't know offhand if they deduct a portion of that since they own KWeb, right? How is this not coming up? So here's the prospectus. Sorry to do this during the video. All right, so management fee 0.25%. Acquired. All right, that makes sense. So China, here's KWeb again. Where the hell is the expense? It was 0.69? Yeah, okay. So 0.69% for KWeb, and if you look, this is the KLIP. This is the KLIP prospectus, right? Yeah, covered call strategy ETF. So the KLIP prospectus, okay, yeah. So they charge 0.95% total. So the double dipping is in the breakdown. The 0.69% acquired fund fees, that comes from KWeb directly, and they're actually going to only charge you 0.25% for KLIP for the covered call part. So the expensive part is actually owning KWeb, which is very surprising, honestly. I don't know if I caught that before. I did the review on this one so long ago. And then, of course, they have additional 0.01% other expenses, which, whatever. Okay. All right, so 0.95%. That's okay. I'm okay with that. All right, so here's the holdings. They own 4,577,112 shares of KWeb, okay? Now, they also have cash. They have about 5.4 million in cash. Well, we know ex-dividend date's coming up. Maybe they're holding it for the next distribution. Because, that's a decent amount, right? They don't have treasuries or anything like that. Outside of that, here's the options. They have a whole bunch of options, and if you see, it under the holdings, obviously the options are all for KWeb. We got 2, 4, 6, 7 different options. Now they also have different expiration dates, anywhere from 2/23, which is this Friday, to next Friday 3/1. And then the next Friday from there, 3/8, 3/15. So they go out like every week or so, all the way up until 3/22. And also the strikes are all over the place, so they scatter their strikes. So to me, this is a fund that I like. I like the strategy. Now, the question you're asking is, how are their covered calls doing? Are they out of the money? Well, right now, not so much. So if you scroll over, I have formulas here. I did, for you Excel nerds, I'm sure you know what formulas I did. So I did a right formula to pick up the call amount, and then I calculated how much they're out of the money for each call. So here's the KWEB price. KWEB's priced at $24.91, and most of the calls are, are below that, right? Yeah, percent out of the money. Yeah, so most of the calls are below that. So they are, sorry, I'm just like thinking. So the KWEB has blown through the calls. So 23.81, this is 4.42% in the money essentially, right? It says percent out of the money, but obviously if it's a negative, it's in the money, right? So since KWEB is above the call of 23.81, it's in the money. Same thing with the next one, 6% in the money. Oh, next one, 25.41, that's 2% out of the money. So that one's okay, but the next four are not good. They're all in the money. And they all have different expirations, and obviously I put days to expiration so you can see how much out of the money they are per day, which, again, it's only relevant for one because only one is out of the money. So it doesn't really give you a good picture. But all you need to know is their calls got blown through, okay? Their calls got blown through. Now, they do like monthly calls, right? So I went back. Let's see. This is the chart of KLIP versus KWEB. So today, for context, is February 20th. So let's go to like January 20th, for example. So KWEB was priced at about 23.11 on January 20th. So if you look at the calls here at 23.11, okay, not so bad, right? In fact, we can plug that in here, 23.11, right? We can do this. 23.11, just to get an idea of what they may have done. Okay, you'd be like, okay, they're about 3% out of the money, 1% out of the money, 9% out of the money, 2%. So that, seeing that's okay. And then let me just undo that. Seeing that makes it a little more justified because obviously KWEB has been on the up and up, right? So since January 20th, January 23rd, it went up 4.89%. And guess what? KLIP went up 4.08%. So that's pretty damn solid. But then you could see, okay, it went up 2.89, and then KLIP only went up, 1.9, because obviously they were capped at that point. This one is very interesting. KWEB went down 2.57. KLIP went down 5 point. That must have been ex-dividend date. January 27th or around there, I assume so, right? January 27th. Go to distribution. X date was 29th. Sometimes these dates and the formulas get screwed up in the Excel, but what was it? 3.7% yield. All right, so yeah, that's probably the reason, because it's not going to go down and KLIP not do better. Because look at January 30th, right? 2.05%. So yeah, that must have been the ex-dividend date taken out. Anyway, let's keep moving on. KWEB went up 1.37. Okay, they captured that. Yeah, see when it goes down 2.24. KLIP did better because obviously they sell covered calls, which is a bearish play. All right, what else we got? Ooh, KWEB went up 1.08. They only got 0.35. So at that point, they're pretty capped. But again, they sell a lot of different covered calls at different times, so they probably added some. Because if you look here, KWEB went up 6.72, and they actually captured almost half, no, more than half of that, 3.56%, which, you don't want to see. But, looking at this, it looked ugly, but at least it looks like maybe they added another call to capture, most of that. And then it went down again, and then it went up, and then 2.71 versus 0.74. Again, they were pretty capped at that point, so it's understood. Here we go. February 14th, KWEB went up 3.58%. KLIP only went up 0.88%. Damn. So, needless to say, they got to get out of these calls, man. They got to. So, I don't know. I'm guessing since they pay return of capital 100% for the most part, I think almost all of their payments are return of capital, they may do a cash settlement and not actually let any of these shares get sold. I'll have to double check the prospectus on that one, but assuming they do that, that's a good thing because they can take the losses and then use those losses against future distributions. And that way, they can mark them as return of capital, and we don't have to pay taxes on the payments. And by the way, this is not tax advice, nor is it financial advice, because I'm not a financial advisor, just a schlep on YouTube recording random videos about high yield dividends and how to retire on dividends. So yeah, that's the gist. That's where we stand on KLIP. But we have ex-dividend date coming up. I want to make a bigger position in KLIP personally, but in time. I know everyone hates it, but I am a fan. Market value, 112 million. So obviously I'm adding up the market value of all those holdings. KLIP price is 15.05, and believe it or not, they did not post the outstanding shares on their website. I don't know why, but I'm calculating it to be about 7.5 million almost. Also, I calculated the number of contracts, right? So I'm adding up G5 to G11. So if you look here, that's the number of contracts for the options on their holdings, right? So they have 45,771 contracts. And if you multiply that by 100, that's the number of shares being used in the contracts. So then I calculated how many shares are actually not being used. So I take this number in G3, which is the shares held, and I subtract out the shares being used per contract. And they're actually using all their shares. There's only 12 shares not used. And obviously, each contract is 100 shares, so they can't do anything with those 12 shares. So to me, everything looks good. Everything makes sense. Obviously, their calls got blown through, but finally, KWeb is having a recovery. KWeb has not done good, as you know, because KLIP has not done good for that reason. Now, I decided to also pull up the 30-day charts to do a quick comparison. See if I can get this all on one screen. So here we go. So KLIP versus KWeb. So if you look, within 30 days, it went up and then went all the way down, and they kind of mimicked each other. But KWeb went up a little higher, as you see right here, right? It went up a little higher than, KLIP did, and then it dove down, but KLIP did not go all the way down with it, which is good. And then it went up, and then KLIP didn't, so you get the gist. So this fund, it's pretty much, it's what you're used to on, for the most part, on FEPI. Right, and you get an idea, you get the gist of how this works. Obviously, they don't own synthetic shares; they actually own these shares. So I like it, man. I like this fund. The more I look at it, the more I like it. I want to do an update to this probably next week, after they announce their distribution. I'm hoping they'll clean up some of these calls. But we'll do a comparison to see what they cleaned up. Obviously, they have an expiration for this Friday, being the 23rd. So that one will be gone. We'll see what strike price they choose on the next one. We'll also see if the outstanding shares go up. We'll just start tracking it. KLIP is going to be now part of my tracking. The only question is how often. Will it be monthly? Will it be bi-weekly? It won't be weekly. I'm debating on doing KLIP weekly, but not KLIP. Oh my God, FEPI weekly. But KLIP maybe bi-weekly. Worst case, I'll do it monthly. But the more and more I like KWeb, the more I'll probably want to do the video though. So yeah, this is my update. I hope you guys enjoyed it. I hope it made sense. But let me know what you guys think of KLIP after seeing this video. Are you scared of the situation they're in with their calls, or are you okay with them just doing probably cash settlement, take the loss, and then net that against future distributions, so we can expect a lot more? What are they? What's the fund document called? 19A notices. Here's the latest 19A notice. So January was, if you look, wow, it wasn't even 100%. It was 95% return of capital. So 4% of that was return of capital. Okay. So, I'm sure more to come if they take all those losses, right? So yeah, if you were interested, obviously they're called 19A notices for the return of capital. So we'll see what happens with February. We'll see how much they pay. We'll see how much is return of capital. But yeah, to me, a great fund, good for international exposure, good for just exposure, diversification in fund management, right? So, KraneShares is a new fund, different people running it, which we could dive deep into them next time too if you guys are interested. But anyway, it'll be the start of more KLIP, coverage, because it's a fund that I've always kind of liked just a little, then I liked more, and then I liked more and more, and because again, so much love in the beginning for Yield Max that I didn't have enough love to give out for these other ones, but now I'm starting to love Yield Max a little less, and then more I'm spreading the love in other places, obviously KLIP and KWeb being two of them. So anyway, if you guys enjoyed this content, please click that like button. As always, it helps. I think it helps the algorithm. If you want to help the channel, obviously, this channel, it's about just sharing videos, and that's it. There's none of this Patreon stuff. There's no exclusive memberships. You don't have to pay to join a Discord. It's just, free videos. You have to watch, YouTube has the ads, and that's how, they'll pay me, and that's it. I'm okay with that. I don't need anything on top of that. But all I ask is if you hit like and then share, if you share the video to any groups you're in that involve dividend investing, that's always greatly appreciated. It helps the channel, because that's how I'm going to grow, just organically through you guys. I'm not going to, I'll make whatever YouTube pays me, nothing more. I'm not, I'm not that type of guy. I can't be a hypocrite, and I will never be. So, not like you asked about that, but I just kind of went on a rant with that, but you get the gist. But anyway, I got to go. Lunch break is almost over, so let me eat something and get a little fatter since I'm not running anyway. But have a good day, everyone, and thank you for watching. Later.